Hello everybody and welcome to our discussion on activity-based costing. With this method we're going to be talking about how to apply overhead based on activity, some sort of activity measurement instead of just a simple unit volume or hour volume. So that's what we're talking about with activity-based costing. Now for an overview, in various previous videos we've covered job order costing and we've covered process costing. And the basic difference between these two systems is what the first cost object was. For a job order costing, the first cost object that we're trying to measure cost for is the actual job or product. For process costing, the first cost object we're talking about is the department, and then after that, the cost is allocated down to the ultimate product or job. But the key thing with both of these systems is that they both had materials, labor, and overhead to deal with, and the main difference between the two was how overhead was allocated. The thing with activity-based costing is that it works with both job order costing and process costing, so it's not a third type of costing system. It works in conjunction with one of those two. Specifically, activity-based costing deals with how the overhead itself is allocated to whatever cost object we're dealing with. The job, the product, the department. So again, the question is that overhead going to be allocated based on some sort of activity count, which we'll talk about today, versus just a simple labor hour, machine hour, or number of units? Again, ABC can be used with either job order costing or process costing. It works fine with either. So back to our discussion of traditional costing. We're talking about overhead, how we traditionally allocate overhead cost. Generally speaking, there's either one or maybe two or three cost drivers we're dealing with, but there's still volumes. So it could be a number of units. In a very simple example, it could just be the number of units. Every unit gets the same overhead. It might be the number of labor hours, the number of machine hours, or maybe a dollar value of labor or materials. And the reason these are often used, especially labor hours or labor dollars, is that we already know how much of those are going to a particular job. We already have to track that for other reasons. So it makes sense to use that to also drive overhead. It's a simple system. It's not all that accurate, though. And the big assumption here for traditional costing to work is that all units and departments apparently use overhead in the same manner, but that's not always the case. If it is the case, traditional costing's perfect. But again, it's not always a good assumption. So what we do there in traditional costing is we calculate the predetermined overhead rate by taking the estimated total overhead divided by the estimated total direct labor hours or machine hours, whatever cost driver we're using. The point to make, though, is that both of these items are estimated, so therefore the rate is going to be the estimate and the overhead that's applied is going to be an estimate. And step two, we allocate the overhead to the products, jobs, departments, whatever the cost center is, based on actual labor hours or machine hours, whatever that come through. So stage one, step one was estimate. Step two, when we actually have an hour come through, we multiply that by our estimated overhead rate. And again, the big thing here, it's an overly simplistic system because it assumes that the existence of more direct labor hours also means that that particular product should have more overhead. And that assumption is just not always true. Overhead is not necessarily driven by direct labor. Some of it may be more aptly driven by machine hours, but there might be a lot of other things that explain the overhead. So let's take a look at two simple examples. We have Widgets Incorporated, just a general company, produces two products, Widget A and Widget B. The company expects total overhead of $3 million, and that's a lot of different things were built into that $3 million. And they expect 15,000 direct labor hours during that year. And this company decides to use direct labor hours to allocate the overhead, in addition to obviously giving them the labor cost itself. So the calculated overhead rate is going to be $3 million estimated overhead divided by 15,000 estimated direct labor hours to get a rate of $200 per direct labor hour. And just as a reminder, yet again, that's in addition to whatever direct labor costs they already had. This $200 is on top of that. So here, let's say we have widget A that uses 1,500 of those direct labor hours. Widget B uses 13,500 of those direct labor hours. So you can see here that there's quite a bit of difference. Also look on row 4 here, number of units produced. They're both producing the same number of units. So the fact that widget B uses so many more direct labor hours tells us that widget B is much more labor intensive. So in this situation, we would be multiplying the direct labor hours for each product by the $200 estimated overhead rate to get the total manufacturing overhead applied. $300,000 for widget A, $2.7 million for widget B, and obviously the total, because these are the only two products in the company, the total is that $3 million. Now in this case, that's a very simplistic example because we did indeed use exactly 15,000 overhead hours, direct labor hours. In reality, you're probably going to fall a little bit short or go a little bit high above your estimate. Now, generally, because we want to know how much each product cost us so we can determine the proper price, we're going to divide our overhead by the number of units produced to get a manufacturing overhead cost per unit. Widget A is $600, widget B is $5,400. That's in addition to the labor and the materials for that product. So right here, widget B looks like it costs considerably more than widget A. Now, another way to look at this, if you don't want to get the rates, you can actually use an alternative approach here. And you could say that, hey, widget A uses 1,500 out of the 15,000 hours, so they should get 10% of the total overhead as well. They're getting 10% of the hours, they should get 10% of the overhead. 10% of $3 million is still $300,000. Widget B, 13,500 is 90% of those 15,000 hours, so they should also get 90% of the overhead, $2.7 million. Now, what we're doing here is we're bringing it all together. The overhead costs, the direct materials, labor, all of it. So we have the overhead that we calculated before, and they gave us the materials and labor per product. We're just assuming they're given. We would otherwise have to calculate them. And what we find is that widget A costs $1,390, widget B costs $6,560. You know, one noticeable thing here is that since direct labor hours drove the overhead, both are going to be considerably higher on the widget B side. They had more direct labor hours. Now let's bring this forward and look at the gross profit. Again, let's assume that they had $4,500 for widget A. These are just assumed, they're given. $4,500 selling price for widget A. Let's assume there's an $8,000 selling price for widget B. We subtract out the manufacturing cost per unit that we just calculated, and we get a gross profit per unit. They're both profitable. Widget A looks to be more profitable. If you calculate a gross profit margin, a percentage of sales, widget A is 69.11%, widget B is 18%. So again, it looks like widget A is more profitable. It has a considerably higher gross profit ratio than widget B. But the question is that true? Does it really reflect the underlying cost, or is it a possible error in our overhead allocation? So the problem here is that we have two products that apparently use up inputs, use up resources in completely different ways. They both had 500 units, but one used considerably more labor hours. So let's say, what if one product is heavily automated? It uses a lot of machine hours, but really doesn't use very many direct labor hours. And let's also assume that a lot of our overhead happens to be caused by machine depreciation, utilities to run the machine, all of that. Yes, there's still going to be some other overhead related to factory supervision, managerial salaries, security, plant, utilities, supplies. There's a lot of other overhead, but let's say the largest portion of it is machine depreciation. The very fact that that department was more heavily automated just by itself tells you that there are probably going to be fewer direct labor hours. So the fact that so much of that overhead was machine based and we're not even tracking machine hours, we're using something that would be very few in a machine automated department, that tells us there's probably some skewed results here. In the prior example, let's say that nearly all overhead, 2.5 million out of 3 million, is caused by machine depreciation and utilities that are based on machine usage. Let's assume that widget A is virtually completely automated, not 100%, but very close, and widget B uses very little of that machinery. That tells us right there that the overhead allocation is going to be skewed because the widget B that uses very little machinery gets a lot of labor hours, which is what's causing the high allocation of overhead. So it's completely skewed. Now, this is a very simple example, but it could get a lot worse. The point with activity-based costing is that the volume of outputs, like hours, labor hours, machine hours, units, they don't always adequately explain the types of overhead that are being used and how the products use the overhead. So the point here with this traditional overhead, it might work in some cases, but it could lead to significant over or under costing issues of a product or a job, and that by itself can lead to pricing issues, which means that you may be overpricing a product that you think cost you a lot of money, and you're not understanding why customers are not willing to pay that high price for it. The answer is that another company down the road that has a better understanding of their costs is able to charge a lower price. It also may impact issues with focus on your product mix, which product to focus on, basically. So one alternative solution might be just to try out a different cost driver. Maybe machine hours would be better in that situation, but it may not fully address the issue. There might still be other reasons that overhead is allocated a different way, or should be. You could choose to use multiple overheads, departmental overhead rates, and you might have a different cost driver for each department, but again, that still may not fully address the issue because they're all based on volumes. Hour volumes, unit volumes, whatever. So a possible solution here is simply activity-based costing. This is really what we've been leading up to this point. The point with activity-based costing is we're trying to understand the actual root cause of the overhead, what causes it, how one product uses overhead, and it measures activities. As the name implies, we're tracking activities that we are calling the cost drivers. Now, there might still be some situations where you have direct labor hours, you have machine hours. We're going to break all of our overhead into cost pools. In other words, types of overhead, and we're going to figure out what best explains how that type of overhead is used. Now, there's a kind of a warning here, or a disclaimer. Activity-based costing can be very time-consuming. It takes a lot of time to set it up, to get all the consulting done, to interview the staff that work in various areas, to find out what is truly driving overhead. It's time-consuming and resource-consuming, and even after you set it up, now all of a sudden you have 5 or 10 cost drivers, and you have to measure all these different things, as we'll see in just a little bit. It's definitely not for all companies, and in fact, if you have multiple departments, multiple products that are very similar or quite similar, then activity-based costing is probably not going to give you really significantly different results from traditional cost allocation. In that case, it's not worth the extra effort. But if you have multiple products and they are different, again, one is heavily automated, another is labor-intensive, one of them you do a bunch of small orders, production orders for, the other you do only a few large orders. One might have multiple parts that you need to order. One might have just a few parts. Those are the types of questions you need to ask to determine if activity-based costing is right for you. If there are significant differences, ABC might be worth the the try. So there is going to be a two-stage allocation process that we go through for activity-based costing. Now we're actually going to break these stages into sub-stages, if you will, but we'll talk about the two main stages. The first stage is taking all the overhead you have and assigning it to various cost pools. So categorizing it, basically. Now again, you have to take a look at that and see what's feasible. We can't break it into 100 activity cost pools, so maybe 7, 8, 10, 12. We figure out what makes the most sense. What is the difference between the overhead, what's driving it? If we think there's something else driving a certain type of overhead, then we want to possibly consider putting it in its own cost pool, assuming we have a feasible way of measuring whatever statistic we're dealing with. And again, that'll make more sense in just a bit. Stage 2, now we are talking about assigning the overhead from these cost pools to the cost object. When we say cost object, we're just saying what are we trying to identify costs for? A product, a customer, a service, a department. That's the cost object. It's the objective of our cost allocation. Cost pools are where the costs start, and then ultimately we want to know how much cost goes to each job or whatever. So to do stage 2, we have to first identify a proper activity driver that adequately shows how that type of cost is used. Again, we have to keep in mind that we have to track this, so we need some statistic that makes sense. Then we calculate an overhead rate for each cost pool by taking the total cost divided by the total quantity of that driver. And again, these are estimates. That's the overhead rate. Very similar to what we did with traditional costing. We're just doing it now multiple times. We've got more than one cost pool, more than two cost pools. And then we apply the overhead as those cost drivers actually come through each period. Just an example. One of the cost drivers that's pretty common is the number of production runs or the number of setups. In other words, it's trying to get at batch costs, how much it costs to spend time getting the machinery up and running to run one batch of a product. So as a product uses up an actual setup or an actual batch throughout the year, it gets multiplied by that overhead rate just the same way as when we did it under traditional costing. So here, the very first step of stage 1 is identifying and categorizing these costs to put them into cost pools. We have 4 categories that we can talk about. We have unit level. Every unit has it. Batch level, it's performed on a batch basis. Overall product or service level, it's not just one unit of product, it's maintaining the entire product or service. And then facility level, which is basically everything else. It's high level overhead that doesn't really relate to any particular product, certainly not any batch or any unit. So unit level is the easiest because these are the ones we've really been talking about up to this point anyways. What do we have to do for every single unit? Run one unit through a machine, use manual labor to install a part on one unit. We could be talking about selling administrative costs here as well, selling the unit to an individual customer. ABC can be used not just for production, but also for the selling general and administrative overhead. Batch level, again, these costs relate to one whole batch of that product, not just one particular unit. So I told you earlier about the setting up a machine to run a batch. It could be material ordering one big roll of materials that's going to be used for multiple units. If we're talking about selling and administrative again, shipping a truckload of units. Product service level, we're starting to get to the higher level, which means there are going to be fewer of these things. But these would be activities required to service the entire product or service line. So we talk about engineering, research and developing, product testing, things like that now. Advertising for one particular product. And then finally we get to the facility level, which are activities that support the entire company, all the different products we have, all the customers, all the jobs, management of the entire factory. You cannot relate it to any smaller level. Human resources, accounting, just general company-wide advertising. These are facility level costs. So now that we have the categories in place, we have to take a look at all of our overhead, look through our lists of types of costs, and identify what cost pools we think is feasible to use and measure. If you have too few cost pools, you're not getting far enough away from traditional costing, so you may end up with the same problems. Something that truly doesn't address how that overhead is used. But if you have too many cost pools, you may lead to overly complex situations, taking a lot of additional time and effort to track certain metrics. Now we're going to see some examples later on from a healthcare facility, but let's assume for this particular simple example, we have three cost pools. Machine processing, which is at the unit level, every unit gets it. Machine setup, which is at the batch level, and then engineering and redesign, which is at the product level. Now, I will say that's a pretty simplistic example. It's probably missing a lot of the costs this type of company would actually have, but we're just trying to illustrate it. So, out of stage one of the first questions we have, now that we've categorized the cost pools, is how do we get the total overhead split out into those cost pools? For a lot of the problems that you'll see in textbooks and courses, the problem will just give you the amounts for each category because they're not so worried about this stage. They're wanting to make sure you understand how to do the rest of the stages. But in some situations, they may give you a list of overhead type costs, and you'll have to use whatever the problem tells you to try to figure out which pool it makes sense to go into. And then you just add it into that pool. In other cases, they'll give you a percentage. They'll say out of all this cost we have, 10% of it goes to this cost pool, 70% of it goes to this cost pool, and the other 20% goes to the third cost pool. They may tell you that. For our purposes, we're going to go the simple route. Let's assume that the $3 million has been assigned to those cost pools in this way. They give us the dollar amount. Now we have to identify for those three pools a cost driver that adequately measures how much of that cost is being used by a product or a batch or whatever. Now the whole point of activity-based costing is to try to get away from volume-based cost drivers like a number of units, number of direct labor hours or machine hours, and move over to activity-based cost drivers, which would be like the number of batches, the number of setup hours, number of redesign changes, processing time per unit. Now this is like machine hours, so it's similar to it. And as I said before, in some cases we'll still use that. So for machine processing, which is a unit-based pool, we're going to just stick to the number of machine hours. That's what's going to be allocating the cost. For machine setup, we're going to allocate this cost via the number of setups. For engineering and redesign, we're going to count the number of redesign requests we have and allocate the cost that way. Now, as we did with traditional costing, we have a couple of different approaches we could take. We could calculate activity rates, $1 per machine hour, $1 per setup, $1 per redesign request, or we could calculate the activity proportion, the percentage. I showed you that example under traditional. We could do it here as well. To get the activity rate, we just simply take the total activity pool cost divided by the total number of cost drivers. How many machine hours, how many setups? Again, these are all estimates. For the activity proportion, we would take the amount of total activity used by an individual product divided by the total activity used across all products, and then multiply that by the total cost of that activity. So that's like a proration, percent to total, a variety of names for that. So for machine processing, we're going to do one by one. Let's say we had a total of $1.35 million in cost, which we talked about before. We have 39,000 machine hours for widget A, only 150 machine hours for widget B, for a total of 39,150. That 39,150 is what we need to calculate the cost per machine hour. Take the total cost of 1.35 million divided by the 39,150, and we get a $34.48 cost per machine hour. Now, widget A actually used 39,000 machine hours, so it gets $1,344,828. Now, if we want to divide that by the 500 units, we'll get a dollar amount per unit. Widget B uses the $34.48 rate, the same rate, times just 150 machine hours to get a total of $5,172 for the entire product. And again, we'd want to divide that by 500 units to get the dollar amount per unit there. The alternative approach we talked about, if we take 39,000 divided by the total 39,150 machine hours, we get 99.617%. Multiply that by the total 1.35 million cost, and you get $1,344,828 of overhead of this type allocated to widget A. Do the same thing for widget B, and you only get $5,000, a little over $5,000. For the machine setup cost pool, we don't have quite as many drivers. We don't have as many setups as we did machine hours. The cost isn't quite as high. $950,000 divided by a total of 130 machine setups gives you a rate of $7,307 per machine setup. Widget A, for whatever reason, uses 125 machine setups. So they get a total of $913,461. Again, the vast majority of the cost. We'd still want to divide it by 500 units to get the dollar amount per unit. Widget B, we take the same rate, multiply it by only 5 machine setups to get about $36,538. Again, divide by 500 units. The alternate approach we talked about before, 125 out of 130 machine setups, 96%. And then we have 3.8% down below. Multiply each percentage by that total cost, you're going to end up with the same amount under each approach. Part of it will depend on how much you round the percentage, and for that matter, the dollar amount, but it should be very, very close. Engineering redesign, we obviously don't have very many of those at all. Total of $700,000 cost divided by 12 redesigns, $58,333. Widget A, for whatever reason, needed 9 of those redesign requests for its product. Widget B only had 3. So you can see the cost just the same as we did before. This is a more even split, or not more even, but more rounder split at 75-25. And you can get the dollar cost. It's going to be the same. So now, if we take a look at what we did under traditional costing, remember we had the labors, material, and all the overhead. We just had one overhead pool. So we'll take a look at this. The total cost of widget A was $1,390. Widget B was $6,560. Under our new activity-based costing, of course, we're going to have the same materials and labor. Nothing changed there. But now we have 3 lines of overhead. We broke it into 3. Now look, and again, this was after dividing by the 500 units. The machine processing, most of that cost goes to widget A because it's heavily automated. Very little goes to widget B because it's more manual labor, it's not automated much. Same with machine setups. Engineering redesign, widget B, perhaps because it was a manually produced product, they had to redesign it a few times, make it easier for people to put together, whatever the case may be, but it had more cost. But look at the difference here. Widget A now costs $53.08 when before we thought it only cost $13.90. So we might be significantly underpricing widget A. We might not even be hitting our cost. We may be losing money on every widget A. Widget B, we thought it cost $65.60. In reality, it only costs $12.54. We might have been overpricing widget B. We might not have that many people buying it because of how high we've priced it. So this is kind of an extreme example showing just how that cost can differ, but it certainly could come out this way. Now, if we take a look and plug those new costs into our gross profit calculations, we'll find out indeed that widget A was losing money, 17.95%. Widget B was actually, instead of 18% profitability, they were actually at 84% profitability. So in this situation, not only do we need to raise the price of widget A, we need to consider focusing more heavily on widget B for now. Now that is the product side of things, the manufacturing side of things, but activity-based costing can actually work in the service industry as well. The example I'm going to show you in just a bit is from a hospital. And the point here is instead of tracking for a product, we're tracking for a service or a customer. So we could have hospitals, accounting firms, law firms. Every customer needs a different mix of services, so they're going to be cost a different amount, they're going to be charged a different amount. So I said earlier that some activity-based costing systems can use 7, 8, 9, 10 different cost drivers. This is an example, it's an excerpt from the Medicare cost report for hospitals. This is a required cost report they fill out when they are trying to get reimbursed from the government for Medicare. Now what we have here, I'll explain a few things. First of all, we've broken into 3 categories of costs. General service, which are our overhead cost centers, and that's really what we're focusing on here. Then we have inpatient routine, which these are the services that every patient probably has about the same amount of. It's your room and board for the most part. The ancillary service cost centers are the things that some customers need, some patients need, other patients don't. Not everybody needs physical therapy. Not everybody needs a CT scan, operating room. So that's the difference here. But our goal with activity-based costing in this hospital is to take all these overhead costs, lines 1 through 19, skipping a few, of course, and we're trying to allocate the cost down to the customers, the customer services that are being provided, adults and pediatrics, operating room, all of that. These overhead costs are just support for that. So what we need to do, first of all, they've identified the cost pools they want. Each of these cost centers is essentially a cost pool. They've already categorized it. They have some of it's capital related, some of it's employee benefits department. There's some general A&G, administrative in general, operation of plants like utilities, laundry and linen service, cafeteria, social service, just a lot of things there. The goal is to figure out what best drives that cost, or what explains why we have so much cost. For capital related, it makes sense that maybe the more square feet that a particular department uses, maybe it should get more of the capital cost. So that becomes the cost driver. For employee benefits, we take a look at the gross salaries of each individual department. If one department has 50% of all the salaries, they're going to get 50% of the employee benefits cost as well. I'm going to skip A and G. It's a little more complex there, but we'll do operation of plant. They're also using square feet for that. The bigger the facility, the more utilities it uses. Laundry and linen. This makes perfect sense. Pounds of laundry. If we go forward, well, though that just gives you an idea what we're doing here. Now, again, once we know a total cost for a particular cost pool, we have to divide that by the total cost driver, or the total statistic is what it's called in this case, to get a rate. That's exactly what we're doing at the bottom. Another worksheet of the cost report has the total cost in question for this department. So here, the buildings and fixture, capital related, there's $4.3 million of that cost. All these numbers you're seeing down here in this row, in this column, these are the total number of square feet. These are not costs. These are the square feet used up throughout the hospital. So a total of 222,286 square feet. So if we divide the 4.3 million by the 222,000, we get a rate of $19.35. So every department that uses up a square foot gets $19.35 of cost. There's actually another worksheet that does that multiplication and gives you the actual amount of cost. It looks very similar to this design, but instead of these statistics, it's the actual cost that you get when you multiply these two. So that's how the hospital example works. One last topic I wanted to bring up with ABC is actually ABM, activity-based management. Now, some texts devote a few pages to this or a few slides, but really what it is it's using ABC data to manage the company, to make better management decisions. Again, as I said earlier, the example we saw earlier, you might decide to focus on different products. You might decide to increase or decrease your prices. You may need to look at evaluating the efficiency if you're using too much of a particular cost driver. So those are just a few examples of changes that might be made, but that's activity-based management. Now, that covers the topic of activity-based costing, but I wanted to point out that I do have some additional videos out there. One of them shows a practice exercise for activity-based costing. One of them goes through job order costing. There's another for process costing. So these are all related videos that we have. And finally, just wanted to mention my YouTube channel. You can find it either by typing in this link. You can search for Severson Accounting YouTube, or there's also a Dropbox link that I'll post to the profile of this video. And if you ever have any problems getting to this, feel free to comment on the video and I can respond with this link. This link is just an entire list of my videos in an Excel spreadsheet format. Gives the title, the link, the length of time, things like that. So I thank you for your time. I hope this has helped to clarify activity-based costing. Have a great day.